I am not a financial advisor. These videos are all meant for educational purposes only. All complete Trader Academy videos are my personal opinion and perspective. Trading carries a high level of risk, and all results are your own responsibility. Please always demo first. Hey everybody, welcome back to CTA's Daily Review. Today is October 6th, Friday, 2023. Hope you had a good week here. So we had watched yesterday's video, so it makes sense. Outline that we have to get into this daily imbalance. That we also have liquidity sitting here, as you can see with these lows here. So I highlighted this yesterday. Targets for both sides on a day like this for non-farm payroll. You got to understand that on a day like this, you can reach two levels of high interest all on the same day, right? End up being a bullish day, and we end up coming back to test the week open and get into that last imbalance sitting right there as we tap and take out all this liquidity. See the 4 hour here that we do jump in first into the actual daily imbalance. We don't seal it. So because we don't seal it, and we're not even ready in New York anyway, but doesn't take out the rest of the imbalance. So that's a big giveaway that we're coming down when we start the news at 8:30. Sure enough, it does shoot down and take out the liquidity here. Does not take out that last low. So your only options when it's selling, if it's really heavy, is either going to be, definitely, these lows right here are in question to take out. But this low here, is that going to hold or not? If it does hold, it's definitely buying from there, obviously. So squeezing people out, they don't use this gap. They're not interested in this at this time. So you have to be fluid, understanding that in this weekly imbalance here, on the weekly here, see that it's holding price as support, right? So, and if you look at this previous price action, I wish they would stop doing that. If you look here on the weekly here, you can see that these bullish candles, this pops up, comes down, opens up, pops up, comes down, gaps up. So this is like, you have price action sitting here that is going to probably hold it as support. So this is the logic of being in here. And you can see on the 4 hour, if you've been watching the videos in the last weeks, since last week, was mentioning it, that we want to kind of get to an oversold area, and this was going to be kind of lingering up. Now we're starting to kind of see that movement, and so on. Yeah, so the week end up settles above more than half of it. So showing some strength as support and to maybe top side in the near future, right? So let's go into also, before we even go into that, we're going to look at dollar. You're going to see that I was mentioning this pattern on Tuesday. I was like, this pattern generally looks like it's going to be one of those times where it's going to reverse a little bit. Not completely reverse, but I mean, at the meantime, reverse. And sure enough, we did. We popped right up, broke structure, retraced, and had lower highs and lower lows since. See that? So that being said, that's kind of what, and dollar came down even more. That's what really kind of pushed us up more too as well. So let's get into the lecture here. If you look at the 5 minute here now, so understanding this as far as the range goes, look at this hour chart, right? Let me blow this up possibly. So we had the range here originally, okay? Now keep in mind, remember we were ranging down here, and then we made this lower low, and we identified this range, and then we were tracing back up. Gotta watch previous videos so this makes sense. And then we're trying to get to a 50 area, 61, somewhere deep in here, most likely, just to seal up this price at the least in between here, right? That's what this daily imbalance is, and that's why I got this green here. This is the remaining amount that has not been sealed yet, right? It's the whole point. But in this range, I only did it from here to here because we had from here, this range from here to here is a retrace back up and fair delivery. Now, in general, I'm supposed to be adding this, but to this level, it's supposed to be here. Okay, so forget this fib altogether. This is the range from here to here. But the only reason why I say that is because this did not break this low until it went through. So it's not like we came down and then retraced. In this example, we retraced before we take out the low, and we obviously using this as a resistance and balancing price. great resistance selling. But the point is that this is still all the same leg. See how it comes down, finale here, finished on Wednesday. So me knowing that, and you have to also understand, this is for non-farm payroll. So it's not like they're going to respect ranges too well. And this range, now that I have it adjusted here, because this whole time it's sitting here, I know that this is also where it really is as well, right? But I'm trying to use targets, near-term targets for trade ideas that are happening as we're going, right? So you have to understand that. That being said, if you understand that this is here, you got to remember, the Dow Jones, and I'll get into that, and S&P and Nas in a minute. But the whole point is not just ranges. In trading in the markets, you have to understand it's the liquidity and the inefficiency of price. So forget this range. If this 100% level from here to here retraces back to 100%, that's a target. From here to retrace back, that's a complete complete turnaround, 100% retracement. But really, if I deleted this fib and you didn't even have it, it would just be liquidity sitting there. So you got to understand the 100% level on the ranges are also liquidity levels. Just like when we were here, we were coming up, right? So let me put that back. When we were coming down, we found the bottom, and now we're trying to buy up. It's higher high, higher low. See that? See that structure? Higher high. Obviously manipulating as well, right? But pop up. All right, so pop up here, pop down, pop up here, pop down, pop up. So I'm gonna go to it doesn't show it on a 1 hour. It shows on a 15-minute maybe. Let me just do this real quick. So it's just opened up a little bit. That's all that's different here. So as you see with that range, what I was saying, this range here from here to here, when we popped up, watch yesterday's video. Obviously, I said that already, but we don't take out that low. We retrace. We stay in that low. See that? Sitting at the 88 pretty much in general. Body's respecting, but the price tags back up. So this is also a range now from here to here. So range retraces back. Look how it retraces. Now, as far as today goes, we're talking about today. We open up and we retrace into this big-ass candle and imbalance, right? At the 50% level, beautifully. Does not come a little lower and tag that. If you were trading in London and you wanted that, then I get it. I feel for you. But this is also an inversion imbalance right here. If I drag this here between these two spaces right here, drag it out, pretty sure it hits it. Yep, with that 50 right there. If I was to drag it out for you, you'll see, bam, see how it taps that right there? Anyways, but the point is it's in the 50 here. You're in the middle of this actual imbalance. A lot of confluence in this whole area, right? But the whole goal is to set liquidity so they can come up and take out the previous day's high. And check what they did. They got up to almost, they got a little bit over the 50% level in this imbalance, but they leave this space. Now the price comes down. We're not trading yet. So I'm not even ready yet. And then the price trades down up to here. Look at the candles. Look at all the bearish candles. 1, 2, 3, 4, 5. There's 5 bearish candles and this one bullish candle in a way, but it's really retracing up, and it's just bearish, and it's setting up for the 830 to sink. So when we understand all this, I'm not really concerned about reaching up here. Here's the thing: if we were gonna come up. Again, we're just using these for liquidity areas, but all they did was they opened up in the week gap for the Monday. So I'm kind of doing a weekly review as well, but look at this on the week. When we pop up and open up, that's just a retracement. So even it's a gap up and that shows strength, it's really still just the price action is coming from here to here to lower to retrace into this 61, and you can see that range is already got it sitting there, right? But the point is that the week started with Monday as being the high, and then we came all the way down just so we can start back at square fucking one, right? But they do that on purpose so they can come back and wipe everybody out that was selling. And if you take a look here closer, where is the price that's not mitigated yet, or has been fairly delivered? Well, when we take the price down, we still, if it broke through, that would have been something different, but I still probably would have bought it if it broke through this low. The point is that we have, when we shoot down at 830, it shoots down, and we have the inefficiency still left in this daily imbalance. So this little piece of this green This is what framed the actual day, to be honest, with obviously some of this liquidity here. So that's why I drew this here. As you see, we come down and we get, look how close we get to taking out all this. They even leave that low intact. I think it's almost the same level. Exactly, this low right there. You see that? So they wiped out everybody. I mean, if you're still in this, you're a fool to be still in this trade. If the price came down all the way over here, right? That's the reason why I'm a day trader. I don't hold. Anyways, because institutions are trying to probably hold this position. With all that being said, if you look to the left here, what's not balanced right? Well, okay, big shoot price down here, which we mentioned is green. Look above that, liquidity. What's above that? Big price action also left, not balanced. What's above that? Liquidity. So the point of me mentioning all this is that when you're down here and you're going to take a buy, what's your purpose of coming up here? Your purpose is obviously, I just mentioned, to fill the rest of the daily balance. If you see these big ass bullish candles, right, and it keeps flying, well, in your mind, ideas start to pop out and be like, well, where is this thing? Where could this thing actually go? What's the worst case scenario even, and what would mess up everybody? So while this is constantly bullish candles, and as you can see, which I don't really want to teach this right now, but if you notice big bullish candles, that when they close, there's no wicks behind them. They stay bullish. So literally you can enter on these candles that close that are bullish, and it'll just continue to the next range that it makes with that candle. Look right here, very small tail. You could have pushed it as soon as this candle closed. Boom, push it again right here. Look at this. Look at the strength in the candles itself, right? When they close, when these bullish candles close, the next one opens and it doesn't even go below 50% of its own candle, right? So it's constantly pushing. Look at that, right? That's going to help you in your trading to even hold trades for a certain direction. And some people ask me, how can you hold these trades? Well, number one, I look for drives coming down. Number two, I have a target. Meaning, well, that should be number one, really. I have a target for liquidity to get taken. What's a high probability or minimum target? I have three levels. I have a minimum target, I have the actual target, and then I have a beyond target, or what would be further than my target that I'm aiming for, right? So people leave runners on their trades, obviously, right? So with that being said, once you're past here and it's bullish and it's blew through, well, what's your logic? What's your next place of this price going to? Well, you have, again, I mentioned here, with this price imbalance, yeah, I could have sold from these blue candles or this up supply, but I mean, what's above that? Okay, well, and don't forget, it's also non-farm payroll. So if this is not like a normal day, this is a very big manipulative news event. Okay, they're using these so they use their news events to be able to accomplish moves like this. Like we have CPI tomorrow, which I'll get into, but point is, as you see, well, the liquidity is what is going to be the main goal of where you're taking price to. So boom, takes this liquidity up here, retraces back, stays back into this candle here, and then pops back up, and then comes above here and tags. Look very closely. Tags that high. See that? See these highs right here? People sold in here. We got in here. We sold from here actually on Monday. See that? To get it down here, right? Look where the price goes, takes that out, and then what's the last ringer? Is this imbalance right there? Because when we opened up and we shot through it, because that was a support, right? Shot up, that was a range. So it shot up, went right through it, and this is called your seller's remorse, meaning your buyer's remorse. So anyone who was trying to buy here on this level, the price came all the way down and retraced all the way back. And you're asking, well, who the hell would stay in a losing trade like that? Well, you'd be surprised. But at the same time, for them to so-called deliver price fairly, they want to come into that candle right there. See that? And if I draw it out, you'll see that this is an imbalance that look how it taps it right there. So that is not a coincidence right there. Okay. So you can see that very clear. But even if you didn't have this imbalance, that's just confluence with it. The real goal was, number one, this liquidity. Number two, tag the opening of the week right there. See that? Well, actually, that's the opening of the week there. Sorry. But where we gapped up, we opened there, but we really opened from here because this was Friday. So that's why they tapped it nice ever so slightly right there, and that was it. That's all they needed to do. So as far as I'll even show you a couple trades, but I don't like doing the trades because it messes me up. But again, recapping, when we come down, I explained this. We reach up. Now, if you had a fib from here to here, and you were trying to buy, you don't want to use that on a day like this. This is not a normal day, and this is not like the beginning of a sequence coming up in a range. Like if you would use this like in these at this time when the market was moving up, counter trending, okay? But obviously price will break through that because this is a non-farm payroll. So but look, this range from here to here, it did get to the 50 and it made a new high. So yes, that's correct. It's a range. But you got to remember the way the market is, man. It's not going to just keep doing these ranges. All these higher lows, they're going to attack that. So let me delete this because I'm not even looking at that. So again, now 830 is here and then shoots the price down. I'll show you the trade. Believe it or not, and it's pretty sick. I don't know why it looks just kind of like distorted or whatever, but I don't know, the quality sucks sometimes when I screenshot. But anyways, the price, and this is on 10 seconds, so I didn't have it on a 1 minute. I wish I did, but the price does. I was already in it here when we retraced up, and then this happened to just amazingly. And I've traded plenty of non-farm payrolls and CPI, so I know how to catch these trades. I'm not afraid of them at all. Only professionals should do this. So you should not do this if you're new. 1,000%. And if it took me out, it took me out. But I mean, I took the shot because I'm just, not that I'm trying to show off or anything. It's just, I'm confident. I mean, I don't know how else I could put it. But price literally prints right there. I'm already in the trade because I'm already in it here, but it didn't spike up. This literally printed so fast that it was just, you blinked your eye and it was already printed on the chart. So I was like literally instant profit as soon as 830 opened up. And then you'll see here, as you see, there's an imbalance, right? I'm sorry, I put the range here, but my goal is liquidity. So I understand that this is just a piece of liquidity, and I've already drawn out all this already down here. And when I screenshot this, I only screenshot it here, but it's moving so fast, I just leave it alone. But it did come down to here. It came to right there, yeah. No, not here, on the hour. Yeah, came lower over here. So anyways, that's the trade there. Instant profit. I'm taking the profit. I'm not going to sit here and try to hold this. Anyways, after that, before I get into the next trade, so this sells down, right? Obviously, and I showed you here. Now, when this sells down, I don't know if it's really going to come up here or not, but I do know that this is a very good minimum target. But when this comes down, we do have a range here from here to here. So I put a fib here, and price comes over here. I got to show you on a 1 minute. So you see here, understanding that down here is where we were over here, right? Taking out these lows right here. So this low right here especially. All right, so when the price sinks, okay, we get 3 drives, right? I want to take this trade and hold it for 3 drives at least. So here I get out right here because it does look like 3 drives, but this was the real 3 drives. This little loop of price, this little loop of price, and this loop of price. That's 3. Okay, so you get the 3 drives. I'm taking this buy right here. So when I get this, I identify this range and it's coming up, I'm taking this trade. It pops right into the down wick to 1 minute. So I know you guys can only see sometimes 1 minute. And I'm going to be honest with you, on a 30-second, which was much easier with a 30-second. So, I'm just to be honest with you, if you're trading and you want to be professional and you want to make money, I suggest you get the seconds. I mean, I'm just going to say that again. But anyways, you see the wick there. It's a down candle. So price dips into it. And that's the best opportunity you can get to get this buy. Anyways, then it buys up where? Well, remember, we broke this low very easily. And look at this, constant imbalance right there. So if I take this buy, what's a minimum place I'm going to take this buy to? Just to
to ask yourself, well, you can say here or here because that's liquidity, fine. But a more reasonable, farther range is going to be number one right here, because this is the resistance, this is the low where it broke from. Okay, right? That's number one. Number two, I have this fib from here to here. I have the range from here. You can see it, right? From here to here. Comes right to a 79. I'm sorry, 61 right here. 61 right there. Perfect, right? And then that's another sell right there. So my problem today was that when I took the screenshot here of this trade coming up to here. So let me just show that right now so we understand each other. And this was my logic coming to this place to a minimum. Yes, we understand we have intentions of coming up here, but I don't need to have all the moves. All right, I need to have 2 good moves, 3 good moves. That's all I care about in every single day. But this, because I had caught all this, I was like, yo, I'm good, man. I'm just gonna catch a couple more and that's it. Catch this here, right? So you can see the 3 drives right here. So this is a screenshot. Then I take it to I take the picture here because I'm trying to be fucking cool, right? But what I don't like about doing screenshots is that when I do that, I lose a little focus and then I forget what I'm actually kind of really doing. And then I'm sitting here saving it, and then I'm sitting here like, excited about the profit, but at the same time, I'm like just losing focus. So the problem is that when it comes up here to the 61, I was like, man, that's a perfect sell, and I miss it. And because I miss it, I'm pissed. So, here, see how the price comes to the 61? So what we did is we sell from this 61 and we come back down. Now, in this case, when the price comes low, I suggest to hold this. This is one of the reasons why I don't like holding, but I wanted to hold this to up here. Now, here's what happened. This comes down and Dow fucking decides to take another drive down, where S&P and NAS did not. So if I was trading one of them, it would have been much easier for me. But I understand how Dow, the reason why I trade Dow, well, I won't get into that right now, but Dow has this extra lower low. You see that? This is a divergence, a crack in this correlation. It's also telling us that we're going up. It's not like the bias was like, I didn't know the bias, what it was, if it wasn't going to buy from here. I knew it was going to still buy from here, but here they had the higher lows right here, and this was so much easier. And this is one of the reasons why many times I would like to rather go trade NAS or S&P, but I like Dow because they're better at ranges. Identifying ranges is so much better with Dow, and I think it's perfect as far as that goes. Now, as far as the manipulation, as far as taking out liquidity on your trades that you're trying to catch, that would be a reason why someone would trade rather S&P more than Dow. But NAS up here is I like NAS because it goes where it's going, but then it's also not as you don't have too many opportunities. It's kind of like it's just going in this direction. They're all to be honest, they're all doing the same shit, to be honest, but Dow is just better with the ranges. S&P is cleaner on the average side as far as the way price delivers. So like they're all doing the same thing, and does anyone need to switch to one or the other? I mean, dude, the only reason why someone wouldn't trade Dow is because they're trying to avoid extra little liquidity grabs, on their end. But again, you're gonna go to NAS and S&P, and you're gonna not like the way that they move as far as speed goes, or as far as distance, or as as more opportunities and retracements and all that shit. So that's the only difference that just happened is that we made a lower low here. So, and sometimes NAS will do the lower high. They'll be the crack too. So I mean, you got to keep that in mind. But when this happens, I'm not confused or anything. We still know that we're taking this buy to where we're going, right? So, and it's beautiful with Dow because their ranges are very nice, in my opinion. So in that case, the price comes back and then takes out this one more time. So you really get your 3 drives here. See that? All right. So this is an entry here. Entry here, very difficult on a 1 minute. And if you did, you would have to have done it off of either strength from its close right there on that 1 minute candle, or you had to wait for it to pop back into this block, which it does. And then your stop loss would be generally 50% of the wick, or I would have even put it underneath this candle. Because if it's going below this candle, I don't really want to be in the trade. But at the same time, it could come to above the 50% of the wick. So you kind of want to keep it there. But once it's moving, I mean, you're better. You're okay to move it here to this candle because we're moving fast. We're trying to go to a specific area, and if it's not going there, then you're not in the right trade. Or you could have put it below this 1 minute candle's wick too, right? Because that down candle is stuck inside this down candle, so you can you can expect it to hold as support, and also the price will not come down there. If it did, then this is just A, not ready, and B, not you don't want to really be in the trade. It's very simple. So where are you taking this? Obviously, we have many options from this trade. You have this high here. You have this imbalance in here, sealing it up. You have the highs of all this, right? Because this is all liquidity sitting there. We sold from here. I'm showing you where we sold, how I sold it. And then also, obviously, in this green area, which is the remaining amount of the imbalance not repriced. So that would be another target. And after this target, where are you going to say, where's my next target? Well, again, we discussed on the 5 minute, we discussed all that price imbalance, liquidity, and that high, and then boom, hitting that open of the weekly low gap. So that's pretty much how the day pan out. So no nice retracements in here from once we came up here. They did this on purpose to keep the price popping up, so they were in control of the price. They're not offering any more money there. And then that's how the day panned out. So as far as being inside this this weekly imbalance, this baby blue box, where's my little, you have these 50 levels here on this little, you see me sliding it over, right? And price retraces right here. When it shoots up, comes to hit that major low that we got highlighted right here. This one down here that goes all the way. That was this low here on June 1st, right there. So you could have took this trade to even there too, because this could have been resistance. You don't know. We don't know what's going to happen in the market, but we do have the ideas of where it can go. So when the price came up and took out that liquidity, and it's sitting at a 70 here, right here, price retraces back, and then it gets into this sort of support with this wick right here. But also you see the 50%. Look at this. I should have just moved this on the other side. You can see right here that it pops and hits that 50. Look at the same level. See this level right here with this 50 of the in between here. Look how it taps that level perfectly, and you're inside that gap. I'm sorry, that imbalance. So you mitigate it and you tap it. It's all it needs to do, and then it's also sealed price from this wick that's shooting up, because this is sort of like a resistance turn support. Price action has been fairly delivered, coming back, so to speak, right? So yeah, very cool. Other than that, I don't think I mentioned. I mentioned dollar, and then again with same story. We just had a divergence here, and then everyone else came to take out the liquidity. If I zoom out a little bit, look at the difference here. I mean, we came up and we only came up to take out. Look at the liquidity that we took. We're down here at Dow. We took out that liquidity and that piece right there. See that little piece right there, right next to me? This little in here. See that? Look how it tapped. Look to the right now. Look how it taps that level just a little bit, right? And that's all we did. Now Nas, look where Nas went. Nas cleared the whole damn week. They even closed out Friday. Look at this. They went all the way up and closed. They took out every single day. All right, showing strength, right? Look at S&P. S&P was similar to us, but not as, but they're more similar to Dow, obviously. So look at what S&P's in the middle. We took out this low here, which was Tuesday. We took out Monday. See that? And then that was it. They did not take out Friday, but Nas took out Friday. See that? So yeah, man, that's So again, same shit, you know. And what's the common denominator? They're just putting lower highs to then take it out. You know, it's just liquid. It's just shaking out markets, and then also we had a speaker. You know, like we speakered out. Oh, what the hell? Where's my? Oh, that's right, because I blew this up. So you know, it's like look at the speaker. Look how we're pretty much like speakering out, man. You know what I mean? It's. I guess I could blow this up again, but real quick. You see how we have these lower lows here, fans out that way, and then look from here, this same area. You have this high, 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 high. See that? I'll draw a trend line. Fuck it. You see this? Um, I want to make it exaggerated so you can see this. I'm not using trend lines to trade off of. I'm giving you the logic of see how it's speakering out that way. We even had it here. We even had it in a fractal of this fractal. We had it here. If I was to just even count it from here to here, look at that. Like I know when we have this speaker forming and we drop, I know we're gonna. I have an imaginary trend line in my head when it speakers out. Look how the price came down and came right to it. You see that? That's not by accident. Whoops. You get what I'm saying? So like, and how am I able to track this? This is why I use Dow, right? But and Dow is really famous for this. But the reason why I'm showing you this is because I know what they're doing. So like that's why I'm constantly buying liquidity getting taken. I'm not scared of it because I know that that's what they do. You know what I'm saying? Like they took out the liquidity. Now it's like, where is the next piece of liquidity? When we took this liquidity down here, where's the next level? Well, it comes back up here to take out that liquidity, right? Just like when we were up here, we came from here, we took them out, and then we came down, okay? Then we came up, we took out that liquidity. After taking that liquidity, we're going to come down to take out that liquidity. After that liquidity, we come back and we take out that liquidity. See that? So the whole point of this is just understanding market flow, and then this is obviously specifically Dow. So, but yeah, I can project. Like that's why when I'm taking this buy, I also can project that the price can be sitting up here. Why? Because that is us. That is part of this speaker, right? So I hope this all makes sense. I hope this helped you guys. Take care until next. Have a good weekend till next week. Oh, we got CPI next week as well. So I'm saying all this because what's going to happen now is that, you know, and watch. Make sure you watch the end of my videos because I'm usually telling you what's going to happen. So don't just sit here and watch the beginning and then you didn't, or the middle and you didn't watch the end. I'm actually telling you what's probably going to happen the next day. That's why I marked this level and this level, and we came to both. So, damn, this was way too long. So all depends what dollar as well, because is dollar going to keep pushing up is the question. So, whoops, why is that so zoomed in? So are we going to push up a little higher? And then I was also confident in us moving up because I was expecting the weekly candle, so weekly chart, not the daily. I was expecting the weekly candlestick for dollar to be turning into like a pin bar, or to like, you know, this pattern right there, right? So showing major strength, major weakness, and for this to maybe come down and possibly get into this area here or even in here. We don't know. We don't know if it's dollar going to keep going up or not. But that, so if we're going to keep going up, we're probably still coming down to possibly take out even this low as well. Is this the quarterly shift? Are we going to start shifting up? I don't know. We should, but in this not normal times, obviously, we might not, right? Because still inflationary period. So, and if dollar it decides to keep shooting up, my guess is we're visiting this gap right here and that liquidity below that low on the weekly. You see it? This candle, this blue candle, look to the left, look underneath it, which is right on top of this gap, this purple, right? then that would be an area that I'm assuming that we might come back down. Since this was a bearish week and it closed, could the next week be popping up and then coming down, or do we come down first? You'll find out from the opening week open, and then you'll know with dollar more, as well as we're going in CPI next week can do anything. So if CPI could, if price can get us down here, CPI is definitely the catalyst that can get us down there. Okay, if not, the CPI could push us up too as well. So that could be the catalyst to go either direction. So are we going to keep going higher? Are we going to retrace and do this so I can be finished here? Are we in this range here where we end up doing something like this? Type of thing. Like, are we going to do this, or are we still coming down? On some shit like this, with CPI doing some shit like this. I don't know. Okay, so all right. So other than that, hope this helps. Take care and God bless.